Hi guys, welcome to December's report. This is everything up to the end of November. This is the typical Zoopla report that we do, and we talk about exactly what's going on in regards to the latest market news, the latest in regards to the property prices, the latest in regards to mortgage rates. So look, without further ado, let's take a look at what we've got. So the first things first, as you can see here, the overview is we're still up year on year, but we have had dips. So we're going to go through that in a bit. So look, you've got a 7.8% increase year on year in house price growth. You've got a 28% dip in terms of what sales volumes were versus a year ago. And you've got 25% homes with any size of asking price reduction since the 1st of September. Now, let's go through those step by step. We are still tracking as an increase year on year. So to the end of November, and this is what this Zoopla report is, to the end of November, we are still 7.8% up. But we have fallen in September, or we were flat in September, sorry, month on month. We were a slight dip of 0.9% in October, and we were 1.2% down according to Nationwide in November. So we've had those dips. Now, where does that leave us for the year? And a lot of people are saying, well, house prices are falling faster than ever. The reality is we're still now, the prices now, we're still actually where we were back in March. So that's important to note, is that the reality is we've only kind of corrected, again, a lot of people say crash, but we've only actually corrected to where the house prices were in March, April time. So it's nothing to get too panicked about at the moment. Now, do we think they're going to keep correcting? I do. I think we're probably going to see a slow correction over 2023. But what I do feel is that that's going to be the national average. I still feel there are pockets that are actually going to be increasing, because the reality is that whereas things increased dramatically during COVID when there was this need for space, this fashion for need for space, well, they're actually the places that are falling the fastest. And what we're noticing now is more and more people are coming back to the city centres, and in areas that we're dealing, which is predominantly in the north and Canary Wharf behind me, is they're actually holding their own. So let's have a little look. Now, this was all caused by the mini budget. In the main summary you can see here, the mini budget the budget fallout has actually hit demand by 44%, more than new sales of minus 28%. New sales fell by half in the hottest markets, and then less in the affordable areas. Again, the hottest markets at the time was, as I mentioned, the need for space, and that's where new sales have fallen by half there. Then we could start to move down. You've got lower sales and new supply are actually boosting sales inventory. We do, though, expect scarcity to remain in 2023. And look, this is important. This is going to limit the downside for prices. So if you've got high amount of supply and you've got low amount of demand and you've got high mortgage rates and you've got low liquidity, that's the perfect storm for a crash, of course. But the reality is that that isn't the case. We've got great liquidity. Yes, mortgage rates are going up, but we expect them to temper in 2023. But actually, we've still got a bit of a restriction on supply. So that's why we expect there's going to be limited downsides to the market. Now, of course, you've got house price inflation losing momentum at speed, but no price falls recorded over the last quarter in any region or major city. Now, that's important as well, that we don't have these price falls over the last quarter in any major city. We're just seeing a lot of these fall on the outskirts, and that contributes to the national level. Discount to asking price sales widens in recent weeks. We've seen this on Rightmove and Zoopla, where maybe a house was worth 500,000. They put it on for 550, so now they're bringing it back to 500. And the reality is, everyone says, well, that price has fallen by 10%. It just hasn't. The reality is they're just actually correcting it to where it should pretty much be. And widespread repricing of homes already underway, albeit pretty modest in size. So as we sort of come down, you've got here, we're going to come to mortgage rates in a minute, so I'll skip this one because we will come to mortgage rates. It really got fueled, and you know, that thing that kicked it off was the mini budget. The first domino fell when they announced the mini budget, and everything went chaotic. You had the Bank of England saying that they might have to do emergency rate hikes. You got the pound become unbelievably weak, went down to as much as 1.04 to the dollar. And then, of course, you had mortgage lenders pulling mortgages all over the place. So it was this catalyst that kicked everything off. But we've now settled down. We've seen rates stable, although we're in December, I think we might have another rate shortly. We've seen mortgage rates reduce, which has been great. And, of course, we've seen the pound recover to 120, 121 to the dollar, where we are today. But it was the mini budget that actually kicked it off. And it was the spike in mortgage rates that actually panicked everyone. So everyone started to think, do you know what, if I'm moving house, I'm not actually going to do so till after the new year. So that's why we've seen a lot of demand fall off. You've got here as well, sales volume declined less than buyer demand. So the actual new sales are still being agreed are those with mortgage offers, and the motivation to move, for example, first-time buyers, they're facing actually steep rent rises. So you've got first-time buyers having rent increases, so they're thinking, well, what do we do? Do we keep paying a high amount of rent or do we buy? And you've got older households that are less reliant on mortgage finance, and they're funding a move. So we have still got certain demand coming in from different locations and different areas, different demographics. But of course, we are seeing a reduction in demand since that mini budget. And of course, you've got here sales volumes are down by almost half in areas where market conditions where they've been the strongest in the last year. So again, when we've had that need for space, Southern England, we've seen Oxfordshire, we've seen Hertfordshire, those kind of places, the need for space is dramatically reduced. And another reason why it's reduced, not only because obviously those prices are pretty much overinflated, but also people are now thinking about the cost of living crisis. How much is it to heat your house? How much is it for your electric bills, your gas bills, your energy? So they're now thinking, well, actually, let's downsize, let's get a smaller house so we've got less things to pay, less outlay. And that's why we're actually seeing, from a rental perspective, we're seeing a lot more people look at one beds rather than two beds. So typically we would have a couple, they might want a two bed, one for a spare room. Now they're thinking, well, actually, I don't need to heat the other room. Let's just get a one bed, keep costs down, and we'll start saving for that property when we're going to get onto the ladder. But you can see in the graph here that demand weakens over the summer, typically anyway, but especially over the summer of 2022, cost of living crisis, higher mortgage rates, and of course that mini budget, which really dramatically pulled things back just here. But again, as you can see from the 2020 and the 2021, now 2020 you see this huge dip here. This was obviously COVID, just here, that's normal. But you can see typically this time of year anyway, things start to come down. So whether it was 2020, 2021 or 2022, typically things decreasing this time of year. It was just spurred on by the mini budget this year. And of course, as we head into January, February, March of 2023, we expect things to start to pick up again quite nicely. Now, sales inventories, it's recovering off a low base. Now, this is the average number of homes per estate agency. We were down to 4 or 5 at one point, but the sales inventory is increasing, but it did come off of a low base. So actually, we're not back up to where we expect it to be. And this is why we think that we're going to have more of a correction rather than a crash, just simply because there isn't that amount of homes on the market that's needed. And then, of course, as we come to here, you can see here what's called a shakeout. So it's a shakeout rather than a precursor to a housing crash. Now, this is important here. It says here the fallout from the mini budget has clearly delivered a shock to the sellers and buyers. New sales have been more resilient than many expected. But what we're looking is all the leading supply and demand indicators that Zoopla measure continue to point to a rapid slowdown from a very strong market conditions, but they don't see any evidence of full sales or that need for a large double-digit reset in house prices in 2023. Now, that's important because a lot of people are thinking that there's going to be this 10-15% reduction in house prices. We don't think that. Zoopla don't think that. And of course, we're looking at the stats. We're not just basing this on an emotional perspective or reading the national newspapers when you see absurd headlines like 30% fall in the property market. We just don't think that's going to happen for a number of reasons. As I say, one is the fact that the market has been resilient. Stress testing's been done on mortgages. We don't see negative equity kicking in dramatically. And of course, we don't see the need for double-digit reductions. Now, I'm going to go on, I'm going to skip a couple of pages here because we are going to come on to another couple of Zoopla articles. As we come down to the main areas, which are still increasing, they are still in the north. You've still got your Nottingham, your Manchester, Bournemouth, Birmingham, Liverpool, Leeds, Sheffield. It's still these main areas which we tell people time and time again, when you're investing, this is where you want to go, because the annual house price change is still dramatic in these areas. So if we head back to the top, we saw a 7.8, I think it was, house price increase year on year, but that's the average house price. But if you go into other areas like Nottingham and Manchester, you're up to close to that 10% mark. Importantly as well, what are we looking at in terms of mortgage rates? Well, mortgage rates sort of bumped up 6.5%, but we are looking for them to come back down in 2023. Why? Is because we expect that the inflation to come back. We expect the Bank of England to bring rates down. And of course, importantly as well, we expect mortgage rates to start to tick down to that 4.5%, maybe even 5% range. But the reality is, if they start to come back towards the 4% mark, then actually you're only 1% higher than what they were when the market was booming. So the reality is we still think that the market has got some strong gains to be made over the next 3 to 5 years. But the reality is we probably think it's going to be pretty static in 2023. We've had a mini correction now. It might track into the start of 2023. But even if we saw, some people said, well, what if it does dip by 10%? What if we do hit those double-digit reductions? Well, the reality is that would probably only cost us a year in terms of growth. A crash would cost us 5 years in terms of growth. But actually, if you thought, well, actually, I can get a property now at the same price that I could get this time last year, it's not actually too dramatic in the whole scheme of things. And from an investment perspective, well, the reality is that if you are paying something now, maybe you're going to fall 5, 6, 7% in terms of your price. Well, the reality is that you're going to get that back in your income as well. So this is actually something that a lot of people don't realise, is that they wait for this dip. The dip may only happen in 18 months' time. But if that dip takes place in 18 months' time, because property doesn't fall in a straight line, doesn't happen in 1 month, you don't suddenly say, well, I'm going to buy a property 10% for a reduction in a month's time. It might happen over the period of 18 months. But during that 18 months, you can actually make the money back in income. You can make the money back from traditional lets, short-term lets, however you decide to let your property. And typically, the property market never falls as much as the papers say. It never falls as much as what your worst expectations are. So the reality is as long as you're looking for the long-term in property, which we always say you should be, then we've got no doubt that you can make those gains. So let's take a look at a couple of other articles that Zoopla has published. One, they've said it's going to probably be a shakedown. And this is a good article. This is a bit more in-depth. We're saying here about, some people, the average seller is off accepting offers 3% below. Well, my advice to people is that take advantage of this. Many people actually think that the reality is, well, I'm not going to be buying now. Well, if you want to be buying stocks and shares, well, where do you buy? When do you buy them? Well, you buy them when they're dipping. You buy when everyone else is losing their heads. The same with the property market. Well, when should you be buying? Well, now, because if the people are thinking that it's going to fall 10%, go and bid 10% lower. If you think it's going to fall 15%, bid 15% lower. Chances are you won't get it. But think of it from a developer's perspective. Most people read the papers, they get excited from how much the property prices are going up, and they start going in and going, I'm going to buy now because everything's going up. That's the wrong time, because that's the time when you've got no leverage over a developer, no negotiation power whatsoever, because everything's selling. It's times when things aren't selling, which is when you should be actually going to bid. So for example, if you approach a developer now, especially before Christmas or during Christmas and New Year, and turn around and say, well, actually, I'm going to go and bid you, your price is 150, I'm going to go and bid you 135, you've got more of a chance to actually for them accepting, because one, nothing's going on over Christmas and New Year period, and two, they're reading the papers just as you are. So actually, you're going to probably get a better deal now than you would have done 12 months ago. So that's something to also take into consideration as well. But as we see here, we've got sellers dropping their price. Again, we know that already because a lot of them were over inflated to start off with. But this is the important side as well. We've got here, why isn't it a property crash? Because what we're seeing is we're transitioning from an unsustainable strong market to a balanced market. That's it. We're not seeing crashes. We're not seeing lack of liquidity. All the leading supply and demand indicators we measure continue to point to a rapid slowdown from strong markets. But as I said, we don't see here a dramatic decrease. And we head to the last paragraph here. The prospects for 2023 depend on how willing sellers are to adjust asking prices in line with what buyers are expected to pay. But historic data shows that offers need to be in the region of 5 to 7% below what the seller is asking. And again, one thing that's really going to impact 2023 is your mortgage rates here. How far will they go down? So the reality is that underlying cost of fixed rate mortgages for lenders has fallen from 5.5% to 4.1% since early October. So that's great. Even though interest rates have increased, we've actually seen rates fall in terms of from a mortgage perspective. 5-year mortgage rates likely to settle between 4.5% to 5% by mid-2023. I think we might even see them below that. I personally think what we could see is there's two types of inflation at the moment that people are paying attention to. The first is the inflation that you read about every day in the news, which is over 10%. And the other is core inflation. Core inflation takes out energy and takes out food costs. Now, we know they're being driven up by the Ukraine crisis at the moment. So take that out. And actually, we've got inflation of 6.5%, which is a bit more manageable. If that starts to come back, I think that Bank of England will start to bring those rates back. And if they do, we'll start to see those mortgage rates fall as well. So I think, guys, we're still looking for a solid year. I don't think we're going to see major crashes. I think we're going to see slight corrections. But again, my advice is go and bid 5-10% down on the property. Hope for the best that you get a good discount, but make those gains back in terms of your growth, not only from your discount, but your income as well from your traditional or your short-term let. And look, from my side, have a lovely Christmas, great new year, and I look forward to catching up with everybody in the new year. Take care. Bye-bye.